Today, you'll learn about how to understanding your income tax. This is a friendly breakdown of the progressive tax scale, the average rates, and the marginal rates. Other things you need to know to better manage your personal finance. By definition, what is progressive tax scale? You see in this bar chart, the progressive tax scale divides your income into tranches. Each tranche is taxed at a different rate. The more you earn, the higher the rate, but only on the portion above the threshold. A common myth: moving up a bracket means earning less net. False. You only pay more on the additional income. See on this graph. If you have your salary net higher, so you have a much more tax to pay. But if your salary net is down, you pay a fewer tax. The 2K rates, average versus marginals. What is average? Average is a total tax divided by total income multiplied by 100. Your real overall tax burden. What is marginal rate? A rate applied to the last euro earned, useful for simulating a rise or an investment. See in the graph the difference between the average rate and the marginal rates. Let's continue. When and why use these rates? If you estimating a rise, the marginal rates tell you how much of a rise you'll actually keep after tax. So, if you demand a rise in your employer, thinking about the rate of the tax because you could get amount of money in in the basis, so your tax is not included. So after a tax included, you get a few money. So thinking about it before estimate your raise. If you'd like to take an investment decision, if you do annual budgeting, so you must thinking about it. And if you think about tax optimization, it means understanding which deduction and credit will save you the most bars on your brackets. Let's continue. Let's take a theoretical example. Calculating tax on a 40,000 euro annually for a single person. Let's see a trend. We have three trends here. And the first trend, you pay 0% of tax. Second trend, you pay 11% of tax. And in the third trend, you pay 30% of tax. So after calculation, you pay 5,286 for your tax. If you calculate the average is 13.2%, but the marginal rate is 30%. That means the marginal rate is you take it in the first tranche of your salary. See the graph. Visualizing the progressing of your tax. The curve is not a straight line. It's steepened with each bracket. This is what makes the tax progressive. The higher they come, the larger the share that gets to the tax, but never on the entire amount. Let's take a real life example. Meet Sophia and Thomas. Sophia earned 28,000 in a year. She's single. And Thomas earned 50, 55,000 a year. He is married and have two ports. Some marginal rate as Sophia if she got a rise to 30,000 euros. So Sophia pay a tax around 1,688, average 6%, 11% for the marginal rate. But for Thomas per port, Thomas pay 27,500 by a port. The average is 8.5%. The marginal rate is 30%. So, if you see the difference between salary and the difference between a tax, you get more, you pay more. Let's continue of our real life example. What happened with a 5,000 euro rise? This is before a rise, you get 40,000 in a year. So you keep 3,500 of your 5,000. After a rise, you get 45,000 euro in a year. The additional amount is 1,500. This is get to the tax. So the key takeaway is you keep 70% of a rise, not 100% of a rise. Think about it. If you like to have a 100% of a rise, make a calculation before speaking money. With a marginal rate of 30%, Sophia keep 3,500 euro out of 5,000 euro. The remaining 1,500 euro goes to the tax. This is why knowing your marginal rate is essential before negotiating a rise or taking on freelance work. How to make the most of it? Take the expert advice. First, use the marginal rate for every decision. Before any extra income or investment, calculate the net return using your marginal rate. Second, maximize tax deduction. Every euro deducted save your marginal rate multiplied by 1 euro at 30%, a 1,000 euro deduction. That's equal 300 euros saved. And the last, think long term with the average rate. Track your average rate over the years to measure the real impact of your tax optimizations. And finally, let's take a key takeaway. What to remember? Scale progressive by trends, not on total income. The average rate, your real overall tax burden. Marginal rate for every additional euro earned. And the latest optimization. Deductions are worth more at high marginal rate. Now you have all the tools to understand your tax notice and make smarter financial decisions. That is for today, guys. Thank you very much. Don't hesitate to subscribe in your channel to help me to grow in a time. Thank you very much and see you soon.